Hey everyone, Luke here. Today we're talking about Xpel's Q3 2020 earnings report in which they blew through analyst expectations. Let's dig in. So before we dig into the numbers, let's talk about what analysts were expecting. So analysts were expecting $41.39 million in revenue and 17 cents in EPS, which would have been good for a revenue growth of 16% year over year in the quarter. I personally forecasted $42 million in revenue with 18 cents in EPS as management had guided for revenue growth in the high teens in the last conference call. To me, that meant 18 or 19% growth. What analysts had was only 16% growth, so I thought they would beat, and they definitely beat. So in true Xpel fashion, they came in with $46.12 million in revenue in the quarter and 24 cents in EPS, which is a huge beat. That's almost a 50% beat on earnings per share. And Xpel's done this in the past, but even for Xpel, these are monstrous numbers. They smashed expectations. Taking a look at gross margin, they did 34.75% gross margin in this quarter, which is the second highest they've done in the last several years. That's of course up from 32.79% in the previous quarter, but down from 36% in the first quarter of this year. But remember, in that first quarter, there wasn't much China revenue because of the virus. So China is a bit lower margin for Xpel. So when China's revenue is higher, their gross margin is lower. But when China's revenue is lower, then their gross margin is a bit higher. If we look at operating margin, Xpel did 18.24% in operating margin and 14.33% in net income margin. These are excellent numbers. I mean, I don't think anybody was expecting a net income margin of over 14% this quarter. Operating income growth was 48% year over year compared to the same quarter. So that increased to $8.4 million. Net income grew 47% along with EPS. When you round it, comes out to 50% growth in the quarter. They did 24 cents, as I already mentioned, in EPS. Just a fantastic quarter. $6.61 million in net income. If we look at the balance sheet here, and then we'll dive into some of the revenue drivers in the quarter. Cash increased to $27 million, up from $11.5 million as of December 31st, 2019. So they increased cash by 3x by September 30th, 2020. Total assets, $76 million. Total liabilities, just $29 million. So far more assets than liabilities. That's always good to see. Non-current debt of $4.1 million. That's in notes payable. And then they have about $2.5 million in current notes payable. So that'll be paid off in the next year or so. Then we'll see when they pay off the rest of that. I would expect them to pay that off pretty quickly. That leaves total stockholders' equity of $46 million, which of course means their return on invested capital in this quarter was astronomical. Just a really solid balance sheet from a really solid company. Plenty of cash, so they're very comfortable, along with a very nice growth in the business overall. I would expect Xpel to make some more acquisitions going forward, but we'll see. Diving into our revenue breakdown, we can see that paint protection film grew nicely in the quarter, up to just about $32 million from $26.5 million in the year before. Window film grew almost doubled, $6.3 million compared to $3.5 million. And the other category, which includes things like ceramic coating, grew from $764,000 last year to $1.24 million this year. Now, just note that we won't see the effects of the new ceramic coating line of products until Q4 of this year, which will be their next earnings report. So the new ceramic coating products were not in this report. They'll be in the next one. Software revenues stayed approximately the same. I don't view this as a big deal, and management mentioned on the conference call that software would continue to see minimal growth going forward. Xpel doesn't always charge for the software depending on region and what customer they're dealing with. Cut bank credits and installation revenue both saw nice increases. Training declined a bit, which isn't surprising considering the pandemic. Obviously they can't get in there and do a bunch of training as they might have been able to in previous years. If we look at regional revenue, this is interesting as well. US revenue continued robust growth of about 50%, which is just incredible considering that the US is Xpel's largest region still. 50% growth in your biggest region is just fantastic. China revenue was approximately flat year over year, but it was up from earlier in the year because obviously the virus and various things going on with that really hit China revenue hard earlier in the year, but now it looks like it's coming back online. I would expect that to continue ramping up over the next few quarters and then have a big year in 2021, I guess next few months, and then have a big year in 2021. So Canada had fantastic growth as well, which continues to be Xpel's third largest market despite the population in Canada being quite small. And that's at least partially due to the weather in Canada. Obviously in the third quarter, you're starting to ramp up going into the winter season. So people are trying to get paint protection film on their vehicles before winter hits. Europe continued just unbelievable growth. They grew 88% in the quarter over last year, which is just insane. So I continue to be extremely bullish on Europe. I think Europe could challenge USA for revenue for Xpel, and obviously the US is still almost 10 times larger for Xpel than Europe is, and I think Europe will continue to catch up to the US over time. So long term, I could see Europe and China being Xpel's two largest markets, even bigger than the US, and then US coming in third. The UK had solid growth of about 40%, as did Asia Pacific. Middle East and Africa grew very quickly as well, nearly doubling revenue year over year. Finally, Latin America saw a bit of a decline, and the other regions category saw a decline in revenue. These are only a small portion of overall revenues, though, so they had little effect on the bigger picture. Longer term, I don't see any reason why Xpel can't continue to grow in those areas. So going forward, I expect Xpel to continue this growth going into Q4 and possibly even increase this growth in 2021. Analysts have yet to raise their forecast for 2021. They still have $180 million in revenue. In my opinion, that's just straight up too low. I think Xpel will easily do $200 million in revenue and maybe as much as $215 or $230 million. And I think Xpel will do at least $1 per share in EPS and possibly as much as $1.50. If we take a look at the share price right now at about $38 or $39. Obviously, the stock has done very well since coming out with these earnings, going from about $30 to just under $40. I think we almost hit it today. Even at 38 or high 30s, though, I think this stock's a good buy. The market is not pricing it in $1 of EPS for next year, and I think this stock could trade at 50 times earnings, no problem, if they do indeed earn $1 per share in 2021. That would put shares as high as $50 in the fairly short term. Furthermore, Xpel's market cap just crossed $1 billion. That's still only 5 times what I think they'll do in sales in 2021 at the low end. So when you consider that Xpel is growing revenue at 30% and net income at 50%, and the first 2 quarters of 2021 will grow significantly faster than that because for the last 2 years, Xpel's revenue in the first half of the year has been suppressed because in 2019, they had an inventory build that led to reduced revenue in the first half of 2019. And then in 2020, obviously the virus hit, and so things got shut down. That means going forward in 2021, the first 2 quarters of 2021 will look more like the second 2 quarters of 2020. That bodes very well for Xpel. I don't think analysts have even realized that, but their growth in Q1 and Q2 2021 is going to be like 50, 60, maybe even 70% year over year. And of course, if they maintain like a 13 or 14% profit margin, they're going to crush earnings estimates. So to conclude, both analysts and myself were off this quarter. Xpel obliterated our estimates, and I mean they smashed them. This was a home run quarter for Xpel, and it just increases my conviction in the company that much more. I think analysts are still sleeping on this stock despite the increase in share price. I don't think it's pricing in next year's numbers very well. So Xpel remains my personal largest position, just for full disclosure. This company is executing on all levels. I think it's a strong buy, and I think Xpel will continue to do very well going forward. Anyway, that's all I have for today. Obviously, I'm using a brand new camera. Let me know what the quality is like, because I really wanted to nail that. It'll only get better, I think, as I learn how to use the camera better. And make sure you subscribe and leave a like on this video, and I'll see you in the next one.